Chris, thank you so much for jumping on and joining us today on the Funny Business Podcast. For those at home listening, tell us, who are you and what do you do?
G'day guys, yes, I'm Chris Titley. I'm a director of Sub11, which is a home for Fintech content. What that is short form social media posts, a newsletter, podcasts, and covering the sector of Fintech here in Australia, which is it's a thriving little sector, but it's a pretty niche field. But that's what I do now. Previous to that, I had 20 years experience in financial markets here in Australia and the UK, predominantly being a retail stockbroker focusing on Australian equities.
Mate, I've seen all the content coming out and been pumped out of Sub11. Surely your fingers are tired from all the blog posts you've been popping up.
a little bit of arthritis on the right hand. Yeah, no, for sure. There's lots happening. There's certainly a plethora of information to come out of the fintech. Some good, some not so good. It's been a rocky ride the last 6 months for public market valuations, but broadly speaking, positive on the sector over the next few years, even decades to come.
Well, mate, you're in Sydney at the moment. What are you up there for?
Mate, as you noticed, I got the hoodie on. It's a bit cold here in Sydney. Brizzy was a nice little day when I left this morning at 5:30, but here for the Australian Fintech Awards tonight to see who picks up those gongs and to network here and to socialise a bit.
Do you have the speeches in the pocket? How do you normally operate when you receive all these awesome awards?
Yeah, so great question. I'm not receiving any awards tonight, so I will be partaking in the social element of that as opposed to the awards tonight. And so I'll be taking no part, have no responsibility apart from trying to meet as many fintechs as possible and patting those on the back that are awarded the winners or runners up tonight.
That's almost the best job ever, really. You don't have any responsibility. All you have to do is have fun, meet people, and just enjoy the night. And people are sort of anxious about, will I win? Won't I win? That's sitting there, sitting in their heads, and you're just going, I can't wait to meet you. I can't wait to meet you. What a good night.
It's not a bad role for tonight. Yeah, it's not all like that, but certainly there's tonight shall be fun. Yeah.
Chris, Lach's just saying that the last awards that he got invited to, he got invited down to Pause Fest on behalf of Heaps Normal, and they cleaned up at the awards, and I took
all the credit. And I was like, yeah, all the hard work was sort of done by them, but we helped amplify that message, and it was very us, wasn't it?
You articulated their message to a wider audience. Is that right?
That's exactly right, and we play that to their success. You know what I mean?
Well, they won 3 awards, and he hasn't even given the trophies back to Heaps Normal yet. He's still got them next to his bed. So if there's any sort of inspiration,
you're playing a small part in someone's success. So that in its own right deserves an award.
I like that. But hey, we'd love to get straight into some of the headlines. One of your ones actually covering our friend of the show, Caroline Tran, clever app, doing good things. Love to get your thoughts on all things clever.
Yeah, so the funding round that she did was actually probably the first piece of funding. I was actually looking at that this morning in fintech in Australia on a private side. I think it would have been 3 or 4 weeks since we've had some funding. It was almost to the point I was thinking, is there something happening? I mean, definitely public market valuations have come off and it's harder to raise money. But then we saw that good news in terms of the funding that she got to pursue her app, and I think financial wellness and the overall broader sector of personal financial management is hot right now. There's a big gap. One of the largest competitors here in Australia, Pocketbook, ceases to operate anymore. So it's wide open, and I think she's in a good position now with that funding to put the foot down and see what happens.
It's crazy to see. Like, obviously, known her now for a while since we had her on the pod, and just seeing she's such a hustler. And to see how much, like, I remember when we first chatted, she was just saying how many conversations she had to have to keep driving this finance conversation, to raise capital, to grow what they know. They felt like they were onto something really good. They had the early indicators. They'd got some users onto their platform early, but it's cool to see people continuing to back young people doing interesting things in the fintech space.
Mate, it sure is, and it's tough. I mean, a lot of these venture capital firms and family offices, etc., are really tightening up in terms of focusing on their existing investments as opposed to taking on new ones. So that's good to see. There are other companies out there that obviously are looking to take on new investments, but it's certainly a completely different landscape than it was about a year ago.
And how do you keep on top of things? I'm sure you're just consuming content flat stick. What do you do to
The secret sauce. So I can't reveal that, to be honest. No, I can. Mainly, it's about 50% inbound and 50% outbound. So yeah, like I subscribe to all the publications and scroll through the various press and scroll through the various the LinkedIn posts, etc. But yeah, a lot of inbound, which is very, very humbling and kind in terms of people sharing their milestones, news, and partnerships, etc. But no, it's keeping me busy, and as I said, it's a very niche sector, but there is a lot happening, and there certainly will be a lot happening for a long time to come.
What got you interested in the media side of things? Like the concept of going down Sub11, you mentioned 20 years in the financial sector to then go and take this angle. What was it that motivated you to take that leap?
Yeah, like, I mean, I've been interviewed a lot of people on the podcast, as you have, and you take a lot of advice from a lot of people about their entrepreneurial journey. And the hardest part, a lot of people say, is just to start. So yeah, turned 40 last year and thought, okay, now's the time to start. Media is completely different to financial services, but there's a driving passion there for learning for me. I'm so interested in what happens with fintech and money and how money moves around the world, which I broadly speak is fintech. It can delve into prop tech and accounting tech and a few other different things, but at the same time, yeah, it's infinite. It's going to be around forever. There's going to be different types of money, cryptocurrency. There's going to be different types of ways of moving money, different types of getting paid. There's lots and lots happening. And for me, being in financial services for 20 years, there was an inherent interest in that, and also seeing some public companies in that space succeed, and also others that did not succeed. But certainly for me, it's a personal journey. For me, it's a journey of learning, a journey of having a bit of fun, and also trying to see some prosperity within the sector.
A couple of weeks ago, Lach and I were lucky enough to go down to the Maybuy launch event for UpBank, and we know that you have strong ties to Dom and backing what you're doing at Sub11. Love to talk about what you think special around UpBank and some of the changes they're making. Obviously, you can't be too biased. You want to stay stay on the fence and talk to things. But Lach and I love the fact that they're shaking it up. They're talking in language that people want to hear, and they're obviously getting that sort of traction. So keen to hear your thoughts on maybe them and any other players you think are shaking it up in the space.
Yeah, no, full disclosure, Dom's an investment partner in Sub11 and sits on my board as well. But at the same point in time, I've been an Up customer now for coming up to, I think, 4 years now, and came across them and trialed their product out, I think probably just after the public launch, and really fell in love with the product. I've said this a number of times before. Banking is not sexy. It's not a feel-good product, but when you start using their product and you start using their user interface and some of the funky games and budgeting tools and roundups, etc., that other banks do offer, they just offer it differently. It's kind of unique how powerful it has been in regards to the virality of it all, because it is an industry that people are not really fascinated too much with. You don't really go up to the counter and tap your card and then turn to someone and say, oh, by the way, which bank are you with? Oh, this is I'm with UpBank. But for some reason, some people do that, particularly with Up, saying, oh, what's that? And how does that work? And when you describe Up to other people, they say, what does it do differently? And really, it doesn't really do that much different to the other functionalities of the big banks. But certainly, it struck a chord with the user interface, the engineering behind the scenes, and certainly, from the customer service point of view.
I was just going to say, touch on the comms and customer service. I know, like, just the way they interact, and especially on the socials, and talk to their demo who use it, it just makes total sense. And you can see why people fall in love with it, because it hits you from all the different areas, which it needs to.
Yeah, and I'm sure Dom and the team have back in the day were working endlessly behind the scenes to try and make that a seamless, flawless experience, which I'm sure would have had its ups and downs, but seemed to have struck the right chord, and now it's under the ownership of Bendigo Bank.
You love the 2Up feature, hey, Lach, because you and Tara's your partner. She can figure out when you're going to McDonald's and doing dirty drive-through run.
Yeah, they know me by name through the drive-through, Chris, so that's not good. But I do love that.
Don't forget, you've got your own individual account too that she probably can't see. Have you not worked that out yet?
No, I have, but I just, I'll leave it there to give her something to, bag me on. You know what I mean? Just, create that comms, create them good environments, and create, a bit of laughter in our relationship, Rob.
And the Saturday afternoon transfer from the joint account into your own name, and she can't see what's going on. Is that right?
Yeah, hopefully there's like this little feature that they can have where they can just block out all that sort of stuff and
hide transactions. That's a good. I like that. Hide.
Yeah, well, that's actually a real thing, and I think Dom's spoken about that in the past in terms of user requests.
It's been some interesting times the last few weeks. We've seen a lot of tech companies announce redundancies. People on the former guests on the show, we've had people like Linktree, Alex Zachariah, Adrian Osman. They're both their companies. Linktree and Mr. Yum have come out with a 17% cut. Yep. It's pretty sad time seeing on LinkedIn. I feel like Lach and I it's been harsh content to have to absorb, I guess, from our perspective, seeing the crazy coolness behind all the stuff over the last 6 to 12 months of come join this, hyper growth and all this crazy stuff, to now seeing these it's like really sad and heartfelt messages about people who are out of work. And for Lach and I, like our perspective on this, and I know we've talked about it, happy for you to jump in wherever you want, Lach, but it's a really challenging space. We've come from the place where we really feel like tech is now more and more the gig economy, but a lot of these companies it seemed like they were offering like this utopia of, no, come work here, do this. But again, how much security is actually in this place? And I know there's lots of things going on in the world, but for me, it's really showing that there are not, whether all good things must come to an end, or that utopia doesn't exist, or good times, sometimes shit happens. Yep. What are your thoughts?
Yeah, and also there was a Brisbane-based company here, SwiftX, that did the same thing as well, which was an interesting post again from the founders. I mean, the founders have been very transparent, I suppose, in terms of their posts, and it is a situation that is less than desirable. I don't think, I think the world's been flushed with capital the last couple of years in terms of stimulus, in terms of equity market growth and asset price growth, broadly speaking, in terms of property prices, for instance, here in Australia. So people have generally been prosperous and buoyant. And then it comes a point where capital efficiency comes into play, and the world has turned very fast in terms of runway to profitability. I've heard that about 1,000 times in the last 2 months. About 6 months ago, I heard growth at all cost, doesn't matter, go for gold, hire away, scale. And then for reasons which have probably been derived from public markets, has been derived from the slow down in stimulus, the back to normalization post-COVID, even though there's still COVID floating around everywhere, but the world's sort of getting back to normal. We're starting to come back to normal with economics 101 in terms of revenue and expenses, broadly speaking. The world does go through cycles. I've been through many in my previous life, where at one point in time, you've got all the money flowing into one sector. Look at buy now, pay later. Look at cryptocurrency, Web3, NFTs. There's many cycles within fintech, and also broadly speaking, the economy, where there's money thrown at, and then it turns a little bit, and then you have to tweak your capital efficiency. And I think these companies are tweaking their capital efficiency to say, okay, let's cut from the bottom. Let's hope that it doesn't cut from the top line growth and the revenue growth, but cut from the bottom. Unfortunately, it's part of obviously working for a startup, is the likelihood that there's swings and roundabouts, probably more so than a traditional job in a business that's profitable. But yes, it's been a wild change, and it's been fast and hard. And let's hope it swings and roundabouts get back to normal, and these companies can get back on their feet again and grow and start employing again.
One of the things that we covered heaps last year, Lach, was just like the crazy valuations that some of these companies were having, whether they, like you mentioned before, were they profitable yet, or were they just going for this full growth? Do you think that this sort of like market reset is going to realign maybe the valuations these companies at early stage, especially in the fintech space, are actually able to get?
Absolutely. I think that's a really, really good point of observation. I think that we've seen companies, broadly speaking, in tech come well off their highs, and whether they are at their highs for the right reason or not, or whether it was just a COVID bump or whatever you might want to call it, companies sort of realign from their base height valuation, which in its own right is a bit of a vanity metric. You can't say, oh, we were once traded at $1 billion, and therefore we're worth $1 billion, and now we're trading at 200 million or whatever it might be. But yes, the realignment, the multiples that some of these companies are getting from an EBITDA point of view, from a revenue point of view, from an ARR point of view, are compressing, are shrinking, and rightly so. I believe in terms of where we are right now in this particular cycle. You can replay this conversation in a year and things might have changed, but at this particular time, there was a lot of money out there, a lot of funds, a lot of money floating into tech, and probably just too hard and too fast, and now we're coming back to the cycles of where businesses that have cash flow and profitability are probably the flavor of the month when it comes to equity markets.
Oh, I'm liking that. What about you're up there at the awards at the moment. Are there any companies there that are tickling your fancy?
Oh, look, there's lots of different favorites, and they're all my favorites. How about that? That's a good answer. But I think that, like the whole mortgage lending business is firing up. I think there's a bit of a race going on there. We've seen 1835i, ANZ's bring out 1.2. We've had Commonwealth Bank bring out Unloan, which is sort of like the Jetstar compared to their product, their core product. Then you've got TikTok, which is not the social media platform, but the lending platform that Bendigo's got an equity stake in. You've got Up coming out with their mortgages. You've got Athena Home Loans, Uno Home Loans, Nano Home Loans. So it's a really interesting spot at this point in time, the digital mortgages, particularly with rates going through the roof. So it's sort of this position where property was so hot and so wanted by so many people that asset prices inflated and all these mortgage companies developed. And now you've got this time when rates have gone through the roof and may continue to go up. And now they're all sitting there trying to get market shares. So it's going to be fascinating to see what plays out in that digital mortgage sector.
I reckon, Lach, you got a house on the way, mate. You shit in the bed or what?
Oh yeah, mate. But that's just my life. You know what I mean? It's just constant anxiety. So it's just another addition. You know what I mean? Whatever.
What about from a podcast perspective? You mentioned being able to chew the fat with some interesting people. Have you had any favorite guests so far on the pod?
Going back many years, I think there's been so many, but I really like Nick Molnar, obviously with the Afterpay very early in 2016, 2017. I interviewed Nick and followed that story and watched that play out into what it ended up becoming part of the Block Group and Square Group. David Thodey was really interesting. At the time, he was sitting on the board of chair of the CSIRO. He's now chair of Xero, and is also chair of Tyro now. It was very interesting from a person from a telecommunications background that's now heavily involved in fintech. In terms of other guests, I think there's a Brisbane-based group, the Urban List. Susanna George was fantastic. That Maxine Horn from Vita Group. There's been so many different wonderful guests over those years in my previous life, but now I'm focusing more on the fintech. And Simone Joyce from Paper Plane I interviewed yesterday. That will be coming out very soon. Xavier Shea, who's now the CEO of Up. I enjoyed that interview immensely. I mean, all these interviews I enjoy immensely, but some stand out for their quirkiness and the ways that they do things, and others you always learn something from it. And I hope, like you guys in terms of podcasting, you're always learning.
Afterpay still gives me nightmares. Really?
Yeah, tell them the story. Go on, Rob. You've told everyone else.
So I reckon it would have been back in maybe 2017. Afterpay was at like $1.98, and I had a good amount of shares in Afterpay, and I also was riding the medicinal cannabis, the green train, and I decided to sell my Afterpay stocks and stay in the cannabis stocks. That was a smart decision.
Head versus heart,
and then I had to watch Afterpay get up to $124, and I had them in at $2. So I still think very much.
So you got a doctor in hindsight, is that right?
Yeah, have you seen the South Park episode with Captain Hindsight? He always comes in and says, "This is what you should have done." So
no. I mean, we've all got those investment stories. Unfortunately, Well, how'd the cannabis stock go, by the way? I really want to know.
It tanked. It went backwards. I've lost money. So it would have been sitting on a tiny little house deposit, and instead, my wife's asking me if what's going on.
The other one I picked up fortuitously with a bit of luck early was Xero, and I managed to interview Rod Drury, the founder of Xero, in April of 2016, and the stock then was about $8 or $10 or something, and have watched that story play out, and that's been a phenomenal story globally. in regards to the stickiness of their product.
Mate, before we let you go, where do you think the fintech space is going to go? It's like you said, we've going through interesting times. We're getting close to the end of the year now, which is weird to say. We're getting into the back half of the year. Yep. But 12 months from now, where are we?
It'll be a rocky period in the next little while. Unfortunately, I think for some of these companies, like you've seen, they're cutting from the bottom to extend their runway in terms of trying to meet either break even or profitability. So I think that's going to have to play out in the next little while. I don't know how long that's going to take, but it feels a bit rocky at the moment in that regard, and the investment from a broader investment community is a bit sort of holdbacky. So that can change at the drop of the hat. But I hope in the next 12 months, the stronger will survive. The ones that may not be as strong have either merged with a stronger group or continue to battle away and get some funding to grow and to deploy capital and hire again. So I'm broadly speaking confident over the next 12 months or beyond, but I do feel like there's going to be some wild ups and downs, unfortunately, but that's any sector.
Makes you appreciate the highs, doesn't it? You got to go through this shit, and it's not just always tick, 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 is it? You got to go through them sort of things to have that full life experience, don't you?
Like you do in anything, and just like investing in cannabis or copper or crypto or whatever you want to invest in, you're going to have some peaks and you're going to have some opportunities to potentially exit, and you're going to have some opportunities to double down or lose your money. I mean, yeah, you're right. It's there's nothing like you're coming back to reality, but yeah, capital efficiency and profitability and road to profitability is the flavor of the month right now, and probably will stay that way for a little bit.
Mate, thank you so much for jumping on and letting us pick your brain today. For people who want to go find out a bit more and follow along with the stuff you're pumping out, where can they find you?
Mate, LinkedIn's the place, or on the web now. So I've got a website up. It's about 3 weeks old. So sub11.com.au. But find me, just type in Chris Titley on LinkedIn or Google or wherever, mate. Happy to reach out to your listeners, happy to answer questions, and pleasure to be on the show, boys. Thanks for inviting me on.